Did you know there's one company in India that certifies nearly 1/3 of all diamonds globally? Yes, you heard that right. International Gemmological Institute India, better known as IGI India, holds a 33% market share in the certification of diamonds, colored stones, and studded jewelry. This is the world's second largest certification and accreditation services provider. The company offers independent grading and certification services that help retailers enhance credibility and give consumers the confidence that what they are buying is genuine. So although IGI India may not be a household name, it certifies 9 out of 10 pieces of diamond jewelry in India. Suppose you're among the many wondering how IGI India built the business model of such a certification company. Well, you've come to the right place. Welcome to Bottomline by Groww. In today's episode, we'll analyze IGI India Limited, its financial performance and growth strategy, and whether this company will benefit from the lab-grown diamond wave. So let's begin. At its core, IGI India provides certification. In simple terms, it serves as an independent validation of a diamond's authenticity, quality, and characteristics. It ensures transparency between the buyer and the seller, which is essential in a category where minor differences in clarity or cut can dramatically impact value. Here's how the process works. Diamond manufacturers or jewelry retailers send natural diamonds, lab-grown diamonds, colored stones like rubies or sapphires, or finished studded jewelry to IGI India's labs. Each item is then graded based on globally accepted standards, specifically the 4 C's: carat, which is the weight; color, the degree of colorlessness; clarity, freedom from flaws; and cut, which is how well it's been shaped and polished. Additional parameters like symmetry, finish, and fluorescence are also examined. The result? A detailed grading report that includes a graphic representation of the stone's proportions, clarity features, and even laser inscriptions when applicable. This attention to scientific rigor and consistency makes IGI India's reports valued across the industry. While the company offers certifications across all major diamond and gemstone categories, its growth engine is clearly lab-grown diamonds. According to its Q1 CY25 investor presentation, lab-grown diamond certifications now account for 54% of IGI's revenue, making it the company's largest and fastest growing segment. The appeal of lab-grown diamonds lies in their affordability, eco-friendliness, and increasing consumer acceptance. And with IGI India holding an estimated 65% global market share in lab-grown diamond certification, the runway for growth appears strong. Beyond its core certification services, IGI India also generates a small portion of revenues, less than 2%, from value-added services and education. Value-added services include screening diamonds to determine whether they are natural or lab-grown, sorting diamond parcels, offering co-branded certification reports, and providing retailers with online tools and training. Now on to the company's financial performance. From a financial standpoint, IGI India has delivered a stellar growth trajectory, though not without signs of mounting pressure. In CY 2024, IGI India's revenue surged 65% year-on-year. This top-line growth reflects both global momentum in lab-grown diamonds and the company's expanding footprint across key international markets. Operating profit also rose significantly, an increase of 33% YOY. Net profit followed a similar trend, growing 31% YOY in CY24. However, despite this impressive growth, profitability ratios have taken a hit. Operating margins fell from 71% in CY23 to 57% in CY24, while net profit margins declined from 50.9% to 40.5%. So what's behind this sharp dip in margins? Primarily, a rise in employee costs. Additionally, higher interest and depreciation expenses, likely stemming from the ongoing expansion, have contributed to the margin compression. Interest costs have tripled from 3 crores to 9 crore rupees, while depreciation has jumped more than threefold from 13 crore rupees to 41 crores. Clearly, scaling this business has come with its costs. On the balance sheet front, signs of a rapid expansion are equally evident. Total assets more than doubled from 603 crores to over 1500 crores in just 1 year. A large portion of this came from increased investment in fixed assets. To fund this growth, IGI India increased its borrowings from 31 crores to 145 crores between 2023 and 2024. While this level of gearing isn't alarming, it does indicate that the company is relying more heavily on debt, a risk factor if future returns lag expectations. Working capital too is under pressure. Trade receivables rose 50% in CY24. This could point to more lenient credit terms to customers or delays in collections, either of which can strain cash flows. On the cash flow side, cash flow from operations improved in 2024 compared to 2023, which is encouraging. But this figure still falls short of the reported net profit of 427 crore rupees. This isn't a major concern since the difference is small, but it's still worth monitoring to prevent any further depreciation. The gap could be attributed to the working capital buildup or non-cash expenses like depreciation. With all these investments being made, how does the growth ahead look for IGI India? The company believes the answer lies in deeper penetration into international markets and further capitalizing on lab-grown diamond certification both in India and abroad. During its Q1 CY25 earnings conference call, IGI guided for 15 to 20% revenue growth in CY25. The management expects the India performance to broadly mirror the consolidated global growth. In terms of profitability, IGI projects EBITDA margins to remain in the 57% to 64% range. Geographically, the company is betting big on the US, China, and Dubai markets, where both natural and lab-grown diamonds demand continues to rise. IGI India's presence in these regions is already well established, and incremental growth is likely to come from strengthening its foothold and increasing volumes. That said, IGI's biggest challenge may lie in the fact that it has already captured a large chunk of the market. With a 33% global share overall and 65% in lab-grown diamond certification, the future growth may become harder to sustain at the same pace unless the broader market itself expands significantly. What should investors understand from all this? IGI India is a company operating in a niche segment that's becoming more relevant. Its leadership in lab-grown diamond certification positions it at an intersection of consumer trends, sustainability, and global luxury retail. Financially, it's not a weak business by any means, but it's at an inflection point. The revenue is growing fast, but so are costs and balance sheet obligations. If IGI India can manage its margins, capital efficiency, and receivables while sustaining growth in its core markets, it could continue to shine in the years ahead. That said, IGI India's valuation multiples could expand significantly if lab-grown diamond certification becomes mainstream, gains industry-wide adoption, and IGI India's brand emerges as the go-to name for lab-grown diamond standards. However, if the structural risks such as pressure on pricing and product mix could hurt realizations and profitability, a possible decline in the relevance of third-party certifications, especially if the industry moves towards self-certification or new technologies, reduce the need for external validation, these materialize IGI valuation and may face considerable downside pressure in India. And there's one more point to look for. The company used part of its IPO proceeds to acquire 100% share of IGI Belgium and IGI Netherlands, which led to IGI India being responsible for operation of the IGI business globally. The key point here is that they paid approximately 1,300 crore rupees for IGI Netherlands, which earned a profit of only 2.7 crores in 2024, and IGI Belgium, which incurred a loss of 1.45 crores. So the question arises, was the acquisition price justify. But for now, investors and analysts would well do to watch how closely it adheres to its growth guidance and whether the sparkle in lab-grown diamonds continues to translate into durable earnings. Do you think IGI India could re-rate in the coming quarters? Do share your thoughts in the comments section. And for more such insights, do remember to hit the subscribe button for Bottomline by Groww.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.